June 20th. I hope you're all doing well. We have some exciting topics to discuss today. Obviously, we're gonna discuss the headline topic, what's happening with the Fed. Last week, not surprising, but interest rates stayed the same. Now the question is this a pivot? Are we gonna stay at this level for longer? Are we gonna see higher for longer? There's a lot of discussion around this, also with inflation. Yeah, let's see. We're going to talk about BlackRock. We're going to talk about their proposal for an ETF. Is it an ETF? Is it a trust? Massive discussion around this. What's the difference? Does it matter? Let's look into this. And then obviously we're going to look at prices. We're going to look what's happening. Bitcoin hitting 50% dominance for the first time in, I think, a bit over 2 years. So yeah, quite a rally there. Ethereum hitting 20%. It's close to its all-time high. Why is this? How is this gonna go on? There's quite some action happening on DeFi chain with the meta chain layer. We're gonna discuss some of the development there. Also, a lot of questions. Are we gonna be listing these tokens on our platform? We're gonna address this. And then at the end, we have quite some exciting things to share from a company perspective. We're celebrating our 4th Cake anniversary tomorrow. There's going to be a big party. There's going to be live stream. We're going to talk a bit about this as well. And we do have another Cake anniversary to celebrate. Fabio, it's your 3rd one. I think, I can't remember, but I think exactly the day, right? 20th June, 3 years ago. I'm not sure what the exact date was, but you've been with the company for 3 years. Time flies. I know. Give your Oscar speech. We always joke in the company when people go in front. Everyone who celebrates Cake anniversary at our company, they always have to come in front. They always have to come in front. And if you are actually working in the office, then like in person in Singapore, then you have to come in front. And so there's like you talk to 160 people. So sometimes it's always a bit scary. And then people go into an Oscar speech and they're like, oh, I want to thank this person. I want to thank this person and this and this and this. And like 5 minutes later, they have to thank the entire company. Yeah. Fabio, what's your Oscar speech?
I have to say I'm not fully prepared. I didn't fully prepare a speech. So just to be very specific, I think about 2 or 3 weeks ago, I sent you a picture because Snapchat or Facebook, some kind of social app reminded me this was happening exactly to this day 3 years ago. And back then, funny side story, I had my first meeting, where I submitted my application. I had this meeting.
Can I show the picture? Are you okay if I show it? I just looked it up.
You can show the picture. And I was actually
if you're on YouTube, then you can see the picture.
I was actually on a sailing ship with my laptop, tuning in with my phone about 10 miles offshore during my interview, and I couldn't manage to. And back then I had a lot of hair. It's all gone now. So
3 years in crypto.
And it's funny because there's like we have a whole team and everybody within like the community team there and customer support facing, we're all losing our hair. So we kind of make a lot of jokes about that. But 3 years ago I had my first interview back on the ship, and then my first day of work was actually 1st of July. So in 10 days or so. But what a journey it has been. And just maybe to also show this a little bit, I haven't had a crypto background. And obviously most of the people that work in crypto companies don't have a crypto background because it's a very new industry still to this day. And I started as a customer support specialist, and I worked there plenty of time, I don't know, 6 months or so before I moved and took on some other things. And this is the big opportunity. I came from a very different background, and still we still have some jobs if you go to cakedefi.com/jobs. And it's an amazing company to work for because I had quite a journey there. I started as I said, as a support specialist, and now I have my own team. I'm head of community, and I'm I have these amazing conversations where you guys tune in with Julian. Yeah, and I'm so grateful that I had this opportunity. And also maybe to mention this as well, it takes some kind of a step to really get going. And maybe this will motivate one or the other person to actually take this step. I was 30 when I made the decision to do something different with my life. I did some tourism, and then I thought, okay, I'm 30 now. I might want to start a family. I need to earn some money. I want to take a career change. And I reflected, what can I actually do? What do I actually like? And I was spending so much time on social media, enjoying podcasts, YouTube videos, reading books about crypto.
And
So
how
I
you
thought,
get paid to do this.
yeah, maybe I need to do that. And so I went on Google and I typed in crypto jobs. I found two websites. I think one of them was cryptojobs.com and the other was also something along the line of that. I wrote 170 applications to different companies. And guess what? 167 of them came back as a no. So 167 no's, 3 yeses, two, and in the end, I could choose between 2 different companies. And I think I made the right choice. So yeah, here I am. Sorry for the yeah.
That was your Oscar speech, huh?
that was it. Yeah.
I think one. So I get this asked a lot, and this is maybe something I want to share here as well. Let's start with something that's not business, not investment, and it's very spontaneous based on what Fabio just shared. I get this asked a lot on who are the best employees that I work with, and to me, it always comes down to the 17 principles that we define. And so the question always is, how do people develop those team principles, and what's their background and how they get there? And the interesting part about none of that in the team principle is like you need to be skilled at cryptocurrencies or you need to have worked at crypto companies before. That none of that is part of the team principles. The team principles are about things that everyone, doesn't matter about their background, what they can have. But one thing I have really learned is it doesn't matter if the people that we have who have been in a lot of companies and obviously have a very different kind of CV than you have, Fabio, right? Who have very like company kind of background. Doesn't mean corporate, but like a company background, right? So very structured and so on. Or someone like Fabio who really kind of moves in from a totally different kind of path in life and switches over. I feel the team members that are really, really good, they have had a very hard path before. Doesn't matter if it's in a totally different thing, right? If it's in their company where they really had to grind and hustle and it was really, really tough, right? Or if it was in a different path, they did have to go through hardship there, either because I don't know the company that they were working at they didn't do so well, or because they really kind of had it rough. There was a lot of physical labor, there was a lot of physical work, there was a lot of long hours, and if you combine that with the skill set and the right mindset that they kind of develop with that, if I reflect on the team members that are really, 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 really good and who really fit in, it is specifically that part. And then, of course, you have these extra pieces. Someone, obviously, who has been leading a group of 20 people, obviously, in the company is going to go into a different role than someone who has never done that, but who is just a very hard worker, learns really fast, is very open-minded, is very good at discussing ideas, picks up ideas really fast. Obviously, very different, but there are these very fundamental things. And I really noticed this, and I think that makes it very special. I don't know, Fabio, what you have to say there, on that part.
Yeah, a lot of, so for example, the work that I'm currently doing is, I spend a lot of time in community and in social media. And a lot of people think, okay, you need to study this for 4 years or for 5 years to really learn this. And I also was part of the interview process, because you need to imagine along the way of the company, back when I joined, we're like 15 people at Cake. And right now we have a very different situation. We have more money, we are an established company, we're a bit more than a startup. It's like a scale up. And so we are hiring different people now. And there's a lot of CVs and a lot of people that I interview during these interview processes. They come from a social media background. They have studied marketing, but in fact, they don't really know how any of this works, because it's so different when you actually learn by doing things. So you might ask yourself, you craft a tweet, and you're probably doing this yourself when you're using Twitter. You're asking yourself, what kind of hashtags do I need to use? So you look at bigger Twitter accounts, what are they doing? You might go and read an article or just Googling things. And I am of the strong opinion that this is the best way to learn things. Just by doing them, by Googling them, by researching it, reading articles, watching a video, and you probably know more and you can do more than you think you can. And the thing that Julian mentioned, and I also appreciate other team members having this, like I enjoy working together with other people that are hungry, that really want to do, that you don't need to ask them to do this or to do that. Like I have a team member, I'm not sure if he's listening right now, Ferhat. I don't need
he should be in, at least on YouTube. I saw him. Yeah.
Yeah, he's working together with me on community. If you're on Telegram, you definitely know him. But I never need to tell him anything. Like he's just proactive. He thinks for himself. He does some research. He looks how things works, and then he does them. And I enjoy working with people like that so much. And we have many other people in the companies as well that they have common sense. They are intelligent, and they're hungry. They're hustlers. And I'm not sure if you can learn this to somebody, but for everybody, when I say everybody knows if they themselves are a hustler or no. And yeah, I love to work with people that hustle, that want to work, that enjoy this. And yeah, I'm very grateful that we have a lot of these people at Cake. Yeah,
100%. Great. Then let's dive into the topics. First one, Fed. Let's discuss. Fabio, you start. What happened last week? Was it a surprise to you? How did the community react? We saw a bit of a different reaction from the stock market versus the crypto markets. Let's go through a couple of things. In all of that.
I was anticipating this. I think the first time that I was anticipating a pause was right after the meeting before that. So since about 2 months, I kind of made the bet, or I was anticipating that they're going to pause. And it was kind of a boring decision. You even made a tweet, I think the most boring Fed decision in a while. And I would agree with that statement. A lot of people anticipated the pause. And I think I watched the meeting. I think it was one of the best meetings. He was more relaxed, and he had better reasoning, and just also the outlook and everything. He gave a bit more confidence, and I think it was also the right decision to pause because now they have a little bit more time to see how everything will be unfolding. And here comes the but, how was this taken by the community and by the market? I think, especially in crypto, a lot of people think, okay, this is it. They're going to pivot now. This was a pivot. And I would strongly disagree with that. This wasn't a pivot. It was a pause. So it gave them some time to look into the future. And I think Julian is sharing this on screen right now. These are the results from the last meeting, no?
No, this is the 26th. Yeah, that's July forecast. So the July forecast already says that 3/4, so 75%, close to 75%, are actually expecting a 25 basis point hike. So that's the market right now. That's the CME probability based on how the CME, how the futures curves are moving there.
And I would agree. I'm also anticipating them to hike again. It depends, of course, on the data that is coming in and if everything is blowing up, like if shit is hitting the fan, basically. Because when, of course, things are taking a turn, they might revisit and maybe pause another time. But I think we're going to see 2 more rate hikes until the end of the year. That's my personal opinion. And that's also kind of in line what he's saying. Like he practically telegraphed most of what they were doing in advance. He said he's going to do that, and he did it. And why would we not believe him right now? Because they are playing in a confidence game, and they they want us to believe them. And the best way to do that is to say it and then to do it. And they kind of did that for this year and for the last year as well. And they're probably going to continue doing that. So yeah, but a lot of people in crypto within our own community on Bitcoin Twitter, on crypto Twitter, and so on, they anticipate a pivot. They think they're going to pivot and everything is going to moon. And I don't think that's actually going to happen. What are your thoughts, Julian, on the pivot, or is it the pivot actually?
I mean, okay, the only thing that maybe kind of puts it for me slightly against it is that inflation is really coming down. So I'm showing the US inflation numbers year over year. So for some reference, a year ago they were over 9% per year over year. So it's always backward looking. This is always important, right? So this is not forward looking, which would be the expectation. It's always backward looking, and that's key to understand. And now we are at 4% backward looking. And June, that's a forecast, obviously. So for June, we're looking at a 3.2% increase backward looking. So, I mean, obviously, so inflation went down dramatically. We are now going into a realm of, I mean, the Fed always wants to target 2%. So with 3.2%, we're getting closer and closer. So to me, that's really the only kind of thing where I say, you know, I don't understand fully on where this confidence by the Fed is coming from that they're going to do. And I mean, the commissioner said this, they're planning on doing 1 to 3 more hikes this year, right? And there are some that are even going for a 6% peak rate. So that would mean almost 4 more hikes. So that to me is just the only thing. Is he more signaling than doing, right? Is the threat like harder to take or more dangerous than the actual action of it? Don't know. I mean, I also believe we're gonna see. I don't think we're gonna see 2 more rate hikes. I think we're gonna see 1 more, and I do think then we're like, that's it. Is it July? That's it. Let's see. I think the reason is also just the reason why they want to do another rate hike, because it's pretty meaningless if they hike by 25 basis points. It's too small to have an impact. Plus, generally, these impacts, they are delayed normally by 6 to 18 months. So if they rate hike right now, it just tells the market, look, we are not pivoting here. We're going to do another pause afterwards. August is going to be another pause, or I think it's in September. Then the next, I never know. It's always 6 weeks. So I think the next one is like beginning of July, and then it's like I think September or end of August. I never know. So these are kind of dates, and there's gonna be a pause probably, and then the market doesn't know is there another one coming in September or October or something, right? So these are just some things to kind of consider in that, and I think that's a key part. The other question is, how well is the economy gonna do at the end of Q2? I mean, Europe is in a recession. Germany is in a recession. It doesn't look like the US is going to be in a recession in Q2. It's very unlikely. Especially the tech sector is booming, driven by AI. The key thing to really consider is, how is this going to play out in the weak summer months? We've had a stock rally like crazy. People are a bit worried what happens if there's now a setback in Q3, which is starting in 10 days. And so these are just concerns that I would have a bit in all of that, where this thing where people say, oh, inflation is going to be longer and it's going to take are going to be higher and interest rates are going to stay up there for longer. Probably, I do agree with that, but I struggle a bit in being as like bearish as some people on that number. I just think that inflation may come down, interest rates may come down faster. It's just going to come down because the rest of the economy is not doing so well. And I think that's why the Fed also wants to start relatively high. Now they are close to where they were before 2008. They can come down and they can buffer that. So that's just something that I see of it. You had do you want to pull up Twitter, or do you want me to pull up Twitter? You had an interesting picture from Dylan Leclerc, which would be interesting maybe to show here if you want to show that here. I can pull it up.
Yeah, that is probably easier. I'm not prepared for screen share. Do you want to comment on it?
Sorry, do you see it?
I do see it. Should I comment on it or?
Yeah, why don't you comment on it?
Okay. So yeah, Dylan Leclerc, he works for Bitcoin Magazine, and he does some he shares a few thoughts on macroeconomics from time to time. And the chart that is on screen right now, I'm trying to describe it a little bit. So there's three graphs, and so there is the treasury rates and the returns from thank you, from S&P index earnings, 12-month forward-looking, and U.S. corporate investment grade bonds. So basically, three different graphs. Two of them are debt, so government debt and corporation debt, and the other one is equities, stocks, the returns that you make when you buy stocks, both dividends and forward-looking appreciation. So, and the S&P 500, so the stock graph, was always higher, of course, because you kind of expect that buying equities, buying stock, gives you a higher return than buying a government bond or a corporation bond. But right now they are
But why? Do you also want to explain why people would expect a higher return?
So because it's more risk. Like if you invest in a stock, you're investing in a growth potential of a company, but you're also taking on risks. And many people say a government bond basically has no risk. I would slightly disagree on that, but it's definitely lower risk than investing in equities.
Yeah.
And of course, we had very low rates over the course of the last 10 years. So the rates were almost zero. So you don't really get a return on government bonds, on treasuries. And right now, of course, we had insane rate hikes, and these rates come up, and the stock appreciations, they come down because for companies, it's much more expensive to get capital. And when capital is expensive, growth is more difficult. So right now, all of these three lines are basically at the same level, somewhere between 5 and 6%. And what does that mean as an investor? So right now, as an investor, I kind of need to ask myself the question, where do I deploy my capital into? Do I buy more equities? Do I buy more stocks? And I'm expecting a 6% profit over the next year or 2 years or 5 years. Or do I buy a government bond? Do I buy a T-bill where I also get 6%? But right now, if I'm feeling a little bit uncertain, maybe I feel that the market is developing negatively over the course of the next 5 years, then it's probably a safer place to put my money into T-bills. So that we're kind of at a shifting point or at an inflection point where, as an investor, I kind of have the opportunity for the same amount of return with different risk profiles. I'm not sure, Julian, how would you interpret this? And is it now a good time to maybe allocate something into T-bills short term?
Sure. I mean, I think short term, the question is really on if you're betting on stocks versus, and you do short term T-bills. I think you're really betting almost on cash, because a 3 months availability on debt is almost like cash. Cash is instant debt, and T-bills is T plus 3 months. So the key question is just really on what you believe is going to happen in this sense, right? And I understand why the risk reward here may actually be in selling some of the stocks. Some of the graphs I have, and then I want to discuss a bit crypto. How does crypto tie in there, right? So if I kind of pull this up here, this is the Nasdaq. This is the part of the S&P that's the tech sector. And if you look at the tech stocks in please both work on your audio quality. Really? Surprises me. We should have really good audio, Robin. I hope Robin is the only one with who has audio issues from us, and no one else does. I don't know. Maybe someone else can comment and our audio is not good. So the tech companies in the S&P 500 are close to their all-time highs. And that's crazy if you compare this to crypto, right? I mean, in crypto, Bitcoin, which has performed the best from its all-time high in comparison to all the other cryptos, is down 60, 70% from its all-time high. And the tech sector is like basically hitting all-time highs right now. So absolutely incredible. And so we're going to look a bit into what's going on. If you compare this with crypto, right, we've actually seen a complete separation from the beginning of the year already. At the beginning of the year, crypto went up, if you remember this, January especially. Then in February, went down. Stocks did exactly the same, the opposite thing. Dropped in January. In February, it shot up. Then when we had this entire banking crisis, crypto shot up, and the entire kind of sorry, that's dollar liquidity. Sorry, but actually, if you look at dollar liquidity and you compare this with the companies, you actually see a very similar kind of movement. When crypto shot up, actually most of the stocks then corrected, and then when crypto started going down, the dollar liquidity went up, and also with this, stocks went up. And there's a lot of charts that actually show that the dollar liquidity and stocks overlay really perfectly. Now, this looks really interesting here, but then when you overlay this with gold, crypto and gold actually moves in tandem pretty similarly. So quite interesting. And so a lot of people are talking about that Bitcoin has moved into the digital gold kind of realm. So I thought this was really interesting. Yeah, but the key part in this, right, and that's where the risk kind of sentiment comes in a bit, is here is where we are right now, and this is the S&P 500. And you can look at all these crashes here, and I mean, there's still so much room down. Bitcoin is close to comparison to the past kind of bear markets. Ethereum as well. So yeah, I mean, the one that really still has some room to kind of drop, right, is actually stocks, and stocks are on average actually doing really well. So yeah, I do see this very similarly in how what Dylan here posts, that it may be interesting to allocate some of your funds in in some fixed income. The question is, do you want to have more short-term noted fixed income or a bit more long-term? That's really going to be depending on if interest rates are going to go down. Then you want to be in longer-term interest rates, longer-term denominations. That because you're going to get a massive kick out of this. About 1% drop in interest rates are going to be around 15% in capital appreciation in these long-term or in these long-duration bonds. So if we're dropping down from 5% to 1% or something, it's like 60%. And so the question is just in what kind of time span. But obviously you don't know, so that's a bit of the risk in that. So very interesting chart, quite interesting numbers. My question to you, Fabio, is why do you think tech has done so well? Why do you think the general stock market has done okay? And why do you think crypto has split up from stocks so much this year?
Yeah, tough question. I can ask myself this question as well, because if you look, for example, as S&P as a broader index, you kind of have 400 to 450 stocks that didn't do so well. They kind of lost a lot of ground since January, and then you have like 2 or 3, maybe 5 handful of stocks, and especially tech stocks, especially things like AI, Tesla, Apple, Google, Amazon, Facebook, and Netflix, and recovered extremely well, and some of them even broke their all-time highs. Yeah, why is tech doing so well? I think people are actually hiding there. And it is like, where do you go when everything is a bit uncertain? And probably a lot of retailers and a lot of hedge funds or a lot of investors are tending into the AAAs, into the things they really feel comfortable in. Like Google has a great business model. Apple has a great business model. And if something comes up there, if competition comes up, they just sweep it in, they buy it up. Like, it's a safe place, and it's probably gonna they have growth opportunities and a safe business for a few years down the road. And like, if you go back 10 years, 15 years, tech was considered a very risky, very volatile thing. This kind of changed. Like, especially the markets right now, they don't really reflect all of these things that we know are true. Like, so if you read any book on investing, they're telling you, look at PE ratios, look at earnings, look at all of these traditional values, and all of them they kind of went overboard. It's more driven by narrative and by sentiment than by any of these metrics. For example, Nvidia is trading at 200 times earning just because they got nice AI tech and made some nice presentations and so on. And same for Tesla. Like Tesla is, they have a very little market share. They have like the less market share than the top 10 other auto manufacturers, but their market capitalization is bigger than all of them. So it's a different time right now. So I guess that would be the reason why I think tech did different. On the question on why crypto maybe has slightly decoupled, I would say because of the whole banking thing, that people were looking for something with no counterparty risk, and then Bitcoin and gold, these two both did well during this whole banking crisis, and both have no counterparty risk. It depends, of course, in how you hold them, but and I would say that this might have something to do with the decorrelation. But here it's important to note, in a moment of, like, let's say, liquidity crisis or a black swan or something, everything converts to one, which means one is everything is correlated 100%. So you saw that in March 2020 with COVID, where just everything sells off at the same time. Of course, things change afterwards, but yeah, I don't know. Maybe you have a little bit more juicy nuggets or insights into that. I haven't thought about that. Those 2 or 3 questions you just asked me extensively. Yeah, what are your thoughts on why those 2 things? Why tech did so well, and why crypto slightly decorrelated?
I think tech did well because it did so badly in 2022, and there is a reverse to the means, and I think that's very clear. We have seen this in pretty much all the sectors, so I think that's a key part. I think the second part is really the AI boom, and obviously a lot of the tech sectors really benefit from this. I listened to the Lex Friedman podcast with Mark Zuckerberg. I really felt it was very interesting. One part, it was covered very briefly, I felt, where he talked about how the ad experience on Facebook could change going forward with AI. And when Mark talked about this, I was like, wow, he's so right. I never considered that, right? And he said, I want to target, like, I think the example he used were dogs. So I'm a dog shop owner who wants to do ads on Facebook or on Instagram. Please write a good copy for me. Please write an attractive kind of text. This is my link to my store. Please create an attractive picture that's very likely to convert, right? And bam. And I thought, that's so true. I mean, it's gonna basically make the ad experience so simple. And I think a lot of people in the tech kind of space realize how AI is just so good at improving and scaling a lot of these, yeah, like IT jobs and everything that's kind of online, written, graphics, and so on. And so, I don't know. To me, that was a bit of an eye opener there. I don't know if you want to add anything there before I go to the non-correlation, but maybe you want to add something.
I've also listened to the Lex Friedman podcast with Zuckerberg, and I don't like him, but you have to give it to him. He's a smart kid. Nothing to add, but I would be interested in your thoughts on why crypto is slightly decorrelated, or is now maybe more correlated with gold than with the tech stocks or S&P 500.
Yeah, and I think the reason this is because for one player and for one player only, Bitcoin functioned like digital gold, and it did. And that's why the correlation was so close. Because if that one player had the same issues outside of crypto, that player would have gone into physical gold because it makes sense. But because they're players in the digital space, in the crypto space, and is locked in there, this player had to look for digital gold and went into Bitcoin. And it's something we've discussed so many times on the show. I'm talking about, in my opinion, Binance. Binance had to get out of dollars. They didn't trust the dollar. And in this case, they didn't trust BUSD. They didn't want to go into USDC because they were worried going into USDC. I think they are worried about USDT because USDT and USDC have shown to be freezing addresses. I do think Binance knew about a lot of their actions that have been ongoing that have been revealed in the last months, and I think they have known about this probably for the last, I think, year, maybe even. So now with BUSD, they had to get out of BUSD. And where do you go if you need to get out of the dollar? Well, you go into gold. But in the digital space, you go into digital gold, so you go into Bitcoin. And that's exactly what happened. And so that is why this correlation of gold and Bitcoin is so high, because it made so much sense that one player had these massive issues. We're talking about 16, $17 billion that they had to get out of. And so there was about 16 to $17 billion of Bitcoin being bought in the last 6 months. And that's just where I think this is coming from. And that's what made the entire decoupling. So if you ask me, like pretty soon, depends. We're going to see that now Binance finds a new place for their digital gold. So they're going to move out of Bitcoin and go somewhere else. Maybe, we don't know. We've seen this last week where suddenly $1 billion went into true USD. It coincided 1-for-1 with the market dipping by 6-7% in 24 hours. It was exactly when this 1 billion true USD was minted. So there was a lot of rumors that this was Binance selling their Bitcoins into $1 billion. Yeah, so this is a bit of the story in this. And I think that's where what's really close to watch. So for me personally, the narrative hasn't changed at all that I have since March. It took me about 2 months to figure this out. January, February, I was really lost. I didn't understand what the market was doing. But then in March, the signal for me became quite clear. The signal is still very clearly there. To me right now, it's all about Binance. Binance kind of moving their treasury around. And wherever this, so we're talking probably between 16 and $20 billion, wherever the 16 to $20 billion moves, this is what impacts the market. And so that's why I think it made so much sense. And actually, it's such a strong use case. I really think that's the narrative a lot of people should actually also really focus on. I mean, if you are Binance and you know that you're going to get sued by the CFTC, by the SEC, there's talk about the DOJ. If you kind of expect all this and you really need to kind of put your assets somewhere that are censorship resistant, they are away from governments, where do they go? They go into Bitcoin. And so I think it's such a strong narrative, and it totally fits in with this digital gold kind of narrative. So that's where I'm coming from. Yeah. I don't know if any of that, if other people have talked about this or said about if you've seen this or yeah.
It makes a lot of sense for me as well. And maybe this is a great bridge to go into the dominance story or into what's happening in the whole, let's say, Bitcoin, Ethereum dominance and the broader crypto markets.
Yeah. Anything else we need to talk about this here? Otherwise, let's move on. I think there's a second huge topic to address. BlackRock. Do you want to start with BlackRock ETF? Is this something you want to start with?
Sure. I know for the fact that you were much more knowledgeable, especially on the specifics. So that there are 2 or 3 things that, of course, pop up. If you were spending any time on Twitter, you probably know that BlackRock filed for an ETF. And I like numbers, so I'm going to share a few numbers and a few things that I picked up sentiment-wise. So they submitted in their whole time. They're very famous for submitting ETFs. They submitted 576 ETFs totally. And they have an approval rate of 99.8% because 575 of those ETFs already got approved. Meaning there's a high chance that this one is going to be approved as well. So now the discussion starts, of course, because there's a lot of nitpicking when it comes to this ETF because it's not perfect. I think everybody can agree on that. It's great because, like, I'm under the opinion everything is good for Bitcoin. It is probably good for Bitcoin that we get an ETF. So what is an ETF? Exchange Traded Fund. And there is a big rabbit hole that you can go down into because, and this is where Julian can probably shed some light on this, where I'm not as knowledgeable on. There's a difference between like a classical ETF and a trust, and there's several aspects to this that I don't fully understand. What I can shed some light on is what was discussed on socials, besides trust or not trust. So, of course, some people really like that BlackRock is getting into the game because they think, okay, this is the adoption we need. Wall Street is getting in. BlackRock is the company. And, Larry Fink, which is like he hated Bitcoin a few years ago. He was the main reason why Tesla discontinued their Bitcoin payments. And now he's submitting a Bitcoin ETF. So a lot of people say, okay, the Wall Street narrative, the Wall Street sentiment is shifting. They are getting into the game. And then you get a lot of conspiracy theories because of the timing that this is happening, why the SEC kind of declined all the other ETFs and they're maybe or maybe not allowing BlackRock to get into the game. Was this all like set up that this is the way they wanted it to happen and so on? And then the question is, of course, is it good or bad, or what kind of impacts does it have? I read a lot of conspiracy theory that I don't fully agree with, like that this is going to be a price controlling mechanism, and I don't think that at all. Like we have many other exchanges where price can be built on that are already futures that are in place today. So I don't really give a lot of validity to that. But there are some other theories, and I think you were going to touch on that. Like some people think, okay, BlackRock is going to fork Bitcoin, which I also don't believe they will. But, and here comes the but, and then Julian can explain this because I know for a fact that he knows a lot what eventually could happen if there would be a fork some years down the road. So yeah, my personal opinion on this is it's a net positive. Is the ETF perfect? Probably not. And the sentiment, there's, I don't know, a lot of discord. If you have spent any time on Twitter, you're probably aware of that. So with that, I want to pass the ball to you because you've got all the nitty gritty details that probably a lot of people in crypto should know.
I think you covered actually a lot of good parts. I think the first and foremost, and actually it applies to blockchain itself as well. All these things, a trust, an ETF, even a token on a blockchain, if you actually think about it, it's nothing else than a wrapper. So it's the wrapper to a box. And the question is, what kind of rights does the wrapper have over the contents in this box? And that's the fundamental question, right? How can this wrapper be transferred around? How often can this wrapper be shared? How long can this wrapper be traded? If I move that wrapper to someone, is it without any issue that the contents are going to moving with it? If the contents in there are producing cash flow, if the contents in there are producing a stock split, if they produce a fork, does the wrapper have a claim towards that? How much does an intermediary have to say? And these are all things that differentiate between a trust and a standard setup of an ETF, or if you want to say even a token or a blockchain, right? So it's all kind of the same thing. Like it's all kind of the same question. And so what it comes down to in this case is, if you have a very traditional ETF setup, then it means whoever owns the wrappers, whoever owns the ETF, has the rights to the underlying without any kind of questions asked. So if the underlying splits, you have the right to that. If the underlying, produces cash flow, you have a right to the dividend, and so on. If there are airdrops, let's talk blockchain talk, then the wrapper has the right to that, right? So very, very, very straightforward. Now, there's always this myth, right, that mutual funds, for example, are actively invested. So there's an active fund manager, and that's why they're expensive. And ETFs, for example, are always passive, so they follow something, so that's why they're so cheap. That is absolutely not true. And the easiest to kind of just look at that is, for example, Cassie Wood. She always uses the wrapper, the ETF wrapper for all her kind of constructs. And she also just charges very small basis points in comparison to mutual funds. She still charges a lot of the basis points in comparison to passive ETFs. But at the end, it's all kind of a similar kind of question. Now, why was there such a debate on this is a trust or this is an ETF? Now, the classic trust or Bitcoin trust that we are seeing right now is that of GBTC, that of Grayscale. And the big discussion there, if you kind of look at the differences between a very traditional ETF and the Bitcoin trust, A lot of it has to do with control. Because if I have a lot of control over this thing, then me as the SEC have an easier time approving it, especially if there's a lot of restrictions. If I know if I can always jump in, if I can stop this entire thing, if the legal kind of rights there aren't as if I can always step in. So as long as if this end to end is not as definite, then I as an SEC kind of have a bit of an easier time, right? So also if the pricing doesn't get updated on an like instant time basis, a trust many times gets updated on a once per day basis. So it always depends a bit on these things, right? So Grayscale, for example, doesn't allow at all, like zero, to actually get a claim on the content on the package. And that's where this entire massive discount is coming from. Because the wrapping is actually completely independent of the package. It's completely kind of weird to understand on why does GPTC kind of follow the Bitcoin price at all. And it actually only follows the Bitcoin price because of hope. It's pure hope that at some point the wrapper, the trust owner, actually has a claim towards the underlying Bitcoin. And that's the really crazy kind of part if you think this through. And that's also why I think the SEC has less of an issue with that so far, even though now there's a lot of lawsuits coming and trying to kind of enforce the claim down to the contents of the package. Now, a pure ETF, right, would like completely automate that. Any fork, any kind of airdrop, anything, the owner of the ETF would always get that. Now, the way this Bitcoin Trust by not by Grayscale, but BlackRock is set up is that you have way more rights than with the Bitcoin Trust, but you're not there where a pure ETF is. And the first and most important thing is you have a right to, and that's the key thing, whatever BlackRock decides is Bitcoin in this wrapper. And that's really, really key to understand because BlackRock actually decides. So this is where a lot of the conspiracy theories come from. In theory, there could be a fork. BlackRock could even initiate that fork. The SEC could initiate that fork. The government could initiate that fork. I mean, it's completely legitimate to initiate a fork. There's nothing illegal about initiating a Bitcoin fork, right? People, like, there's hundreds of Bitcoin forks. There's nothing illegal about it. However, if that fork happens, BlackRock gets to decide which of those coins the wrapper is entitled to own. And that's obviously insane if, for example, BlackRock goes and says, oh, let's create a super completely useless zero value fork. 0.1% of the value goes in there. And this is the one we give to you. So this is the conspiracy theory. They're creating a honeypot. Billions and billions of dollars go in there. Then they fork this and give a worthless coin to all those people. And they keep all the value. Now, to me, this is extremely unlikely because, in my opinion, it's very easy to kind of show that there's some really malintention in there. And even though this may drag out a bit, I highly doubt that this is going to happen. Like, whatever conspiracy theory you are, theorist you are, it's very unlikely that this is a possible scenario. But let's talk about a scenario that is, in my opinion, still unlikely, but really possible and could really face a dilemma here. There's a lot of talk going on right now with the entire Ordinals, right? The Laser Eye Maxis, Blockstream, all of these kind of hardcore, hard money people, they don't like the Ordinals. They don't like that this extra space is used for something so goofy as JPEGs. And there's many talks about censoring this. There's even talk about a fork and so on, right? Again, all unlikely, but definitely not impossible. Like, I think the probability of a fork because of Ordinals, I don't know, it's probably, let's say, 5%. I think that's a reasonable kind of probability. Maybe it's just 3%, but I think it's a non-zero probability. So now imagine the miners, they love the Ordinals. There's an entire movement that goes on now with the Ordinals. There's a lot of exchanges already who are supporting this. So imagine it actually comes to a fork. And imagine the value split of those two forks are, doesn't matter, 80-20, 90-10, even a 95-5 split. It doesn't matter, right? But if you obviously want to make this crazy, then go for a 55-45% split. So it means if before Bitcoin is $30,000, then after the fork, there's two coins. One coin is slightly worth more than 15,000 and the other coin is slightly worth less than 15,000. So now BlackRock either says, okay, you can have both coins, really complicated for an ETF to do so because it would basically then fork into two kind of trusts, very, very difficult in my opinion to do. Or they decide, and now comes the question, right? They decide which coin they're gonna force sell in order to buy more of the other coin, basically dumping billions of dollars on the market. Or they say, you know what, I'm not gonna give you one of the coins, I'm just gonna keep it because you signed that you only get one and I choose which one. And so this is a massive, massive, massive decision there. And that is, I think, where this massive distinction between an ETF and a trust is really important to make. And so, yes, it has full redemption against whatever BlackRock decides you can redeem against. Yes, it's unlikely if there's no fork to ever trade massively again, like away from NAV. So net asset value will track it very closely. But there are some scenarios here that I really see as extremely tricky and not 0% probability, but I think they can happen. And so I think that's the interesting part when people talk about this. There's the other thing about the price fixing. Where is this coming from? So there's also something very special in there. And that is that the custodian is Coinbase. They're using some price feeds from Kraken. And they're working with NASDAQ to really oversee everything. So there is and it's quite dubious explained in what are the kind of controls and possibilities the SEC has there. And I think that's where a lot of the fear about price fixing is coming from. So quite interesting topics, to be honest, in that sense. Personally, I think a BlackRock ETF, and Fabio, I would love to hear your opinion as well. For me personally, a BlackRock ETF would have very little of actual Bitcoins in comparison to the other institutional projects we already have. I mean, we have MicroStrategy, we have all the Bitcoin trusts already. People can self-custody with Coinbase if they have to as an institution. And it doesn't, like, I see these comments and say, yeah, but it's impossible. If you want to move billions of dollars in and out, you can't do these at these platforms. Yeah, but then you can also not do it at the BlackRock ETF. Nothing changes to the underlying. It's just a wrapper. It's nothing else. So if otherwise you can't move a billion in and out, you couldn't move it with the BlackRock ETF. So nothing changes there. So I think there's very little difference in actual Bitcoin being used for institutions because every institution that wants to get into Bitcoin can do so already. It doesn't matter if it's mutual funds, if it's pension funds, if it's your 401ks, if it's institutions all around the world, they all can get access. There's Bitcoin futures ETFs, so and these also track the Bitcoin price really, really well. So they all can get access to that. So I think it's going to have very little fundamental kind of impact. But obviously, it would be very bullish from a brand and perception standpoint from where I'm standing today, because I do not see this as I do not see this as a conspiracy theory here. I see maybe the conspiracy theory a bit more that the SEC kind of protects themselves. They kind of gave a permission to Prometheum. It's very much in the news about being a broker dealer and having a license for all this. And that kind of they can use in order to kind of really fine Coinbase and so on. And maybe BlackRock becomes that poster child for the SEC when it comes to an ETF, even though it's not a real ETF. And obviously there's a lot of rules attached to it that on a first glimpse are not as clear. So yeah, these are a bit my thoughts. How do you see this? Like is this the Bitcoin bull market kind of in its beginning?
If the ETF gets approved, which I'm slightly favoring the outcome that it's actually getting approved because it's BlackRock, come on, and they have a big approval rate and so on, and they know what they're doing, and so I just, let's say it gets approved. It's probably bullish. It's not going to be moon and bull market instantly on. I don't think that, but it's definitely good news, and it's definitely a signal that is helpful for the industry. With these two things said, should you be buying an ETF? Probably no, because as Julian said, if there is a fork, if there is something that happens along the way, and I'm going to be very straightforward here. If you buy Bitcoin, I'm under the strong opinion that you should buy the real asset, and you should probably store it in cold storage if you're up to it. And if you're not, so there are other companies like, for example, Plus 500 or Revolut or whatever that have the same issue as this fund. Because if there is a fork, you're not getting anything. You're not holding the real asset. You're just holding a contract for difference or a wrapper that isn't the same thing. So make sure you hold the real asset. And if you're not holding it cold storage, come on, guys, then there is only one place where you should be holding this asset, and it should be at a platform where you can earn a yield and that has full transparency and proof of reserve. So you might want to consider depositing some of your Bitcoin at Cake, because here you actually hold the underlying asset. If there is a fork, we're going to give it to you. You're getting some yield, and you can check it verifiably with a Merkle tree proof of reserve that it's actually there and it's actually yours. So I'm just saying, if you're looking for, that's probably the two options that, look, this is the advice that I give to my brother and to my mother. So I feel very comfortable in sharing this publicly on a Twitter space. These are, in my opinion, the two best options to buy and hold Bitcoin. You do it in cold storage, or you use a platform like Cake. I really feel that way.
Cool. That brings me to two topics before we talk a bit about Cake. One is Bitcoin. Been doing really well. This is the Ethereum chart. Sorry. This is the Bitcoin dominance. With BlackRock, it got pushed for the first time in a relatively long time, 2 years, back over the 50% dominance mark. Ethereum is bouncing around at the 20% mark. Here's the big difference. It's basically close to its all-time high. I think it's been to 22%, so it's very, very close to that. Let's see what Ethereum can do there, and if Bitcoin can go a bit further. Obviously, I do think if that BlackRock ETF gets approved, I see this a bit different than you, Fabio. I think actually also the probability of it getting approved is relatively low. I know. I'm just not sure if the SEC wants to open that can of worms, but I do see where you're coming from, and I do see where most people are coming from that see this more likely because it's BlackRock and because of the adjustments that they made and so on. So I think that's very interesting here to kind of just look at that. I do foresee, right, that especially if we have like a continuous kind of bear market, Bitcoin, Ethereum are going to be coins that will always do better than a lot of the altcoins. There's also a question here from Robin about Bitcoin and rewards. Look, we can only offer any kind of service that is out in the market. And at the moment, there's just very little demand to borrow Bitcoin. So if there's very little demand to borrow Bitcoin, the returns are just like the lending rates are just very small. So that's just how it is. So we can only offer what is there. So we're going to always be on the lookout. So we will always try to get attractive yield on the platform, but we cannot create yield out of nothing. We need to only be able to give you yield that we can actually source. So hopefully we have something good for you soon. That brings me to a topic that's very hot in the news right now, especially on Twitter and stuff, which is the entire DeFi chain, meta chain layer. A lot of projects popping up there. Really exciting. I think over 200 contracts are now launched. I think they're having an entire sheet of projects. Obviously, the number of projects is a bit smaller, but it's really, really exciting to see all this. I don't know, Fabi, why don't you go first a bit? And then a lot of people ask me if we're listing all these projects and what's going on. So, but why don't you go first?
Yeah, sure. I got one small thing to add for the whole dominance that you just shared. Just to put some perspective onto this, if you categorize it into 4 different categories, and I'm rounding up and down here. So whole market cap 1 trillion. Out of this 1 trillion, 500 billion is Bitcoin, 200 billion is Ethereum, 100 billion is stablecoins, and 200 billion are altcoins, just to put some perspective to this. And the dominance is a bit different right now because you need to add this 100 billion in stablecoins that we kind of didn't have back in the days. But it's super interesting where this whole thing is going to go from here. Now, on the topic of MetaChain, because it's super interesting and we are very close to all of these things happening. I do a lot of community work on DeFi chain as well. As many of you know, sometimes I write myself and I spend a lot of time on the DeFi chain Reddit. I spend a lot of time in DeFi chain Telegram groups. And so I'm going to, this is my personal but very honest opinion. So I set my expectation very, very low because I just wasn't sure how many people would instantly pick this up and start building and going live on socials, building on testnet, testing things. My expectations initially were low because I couldn't see a lot of people like 3 months back or 4 months back voicing interest in doing so. And oh my God, I was blown away because I don't even need to reach out to anybody and ask them if there is building happening. Like if you go on social and you use hashtag DMC or hashtag MetaChain, just give it a try. Every day I open Twitter and I encounter 1 or 2 other projects that are building, and not just building on like we are probably a few weeks away from the main net going live. We're in testnet right now. So they're already building on testnet. Some of them even made the promise or the prediction that they're going to launch within the first few days or week of mainnet going live. Most of them already have set up their social channels. So they're on Twitter, they're on Instagram, they're on your favorite socials. They're posting actively and they're already engaging with the community. There are several projects that already have a testing circle, like people that are helping them test, several hundred people or even into the thousands, where like there is real action going on. There are for me personally, I'm not going to name any names to highlight the specific projects, but there are like 4 or 5 projects that really get me excited. There's a few other ones that are interesting to look at, and maybe there will be more. But for me personally, and I'm super excited. I'm a bit blown away by the just the amount of building and testing that is happening. I didn't expect that. Many of you know, like a month ago or so, or 2 months ago, I made a public statement that it's probably going to take longer than people think. And I might need to revise that statement because it's like, for me at least, everything is happening a lot faster and in bigger volume than I expected it to. That is my first impressions.
I really agree, and I love that. I think that's good. I think for the DeFi chain community, that's going to be amazing. On our platform side of things, for us, obviously, we're going to be very interested in listing successful tokens. Not only to list them, we also want to invest in them. Key thing there is really going to be to avoid any kind of conflict. So it's going to be really, really important to do this in a very ethical and correct manner. So we're going to look into how to do this, and we obviously want to really see a thriving ecosystem. So that's going to be important. So I think that's key. Very exciting, very exciting. I think the community also appreciates that. Coming to the end, 2 things. First and foremost, tomorrow we are celebrating our 4th Cake anniversary. We're having a party tomorrow. It's going to be a closed party. It's going to be employees and a few of some of our partners and so on. I think some media is there as well. It's a very small kind of group, but we're going to be announcing some quite fun things, some cool updates that are also going to be interesting for you. So there's going to be a live stream of that. If you want to watch it, you can watch it on YouTube. That's going to be at 7:30 on our company channel. And then later we're going to have a milestone video, and it will all tie together when I say that, because we may be announcing quite some new things tomorrow. So it may make sense to then understand why the timeline of all that. So it's going to be quite cool. And then with that, we're also going to have something that we already kind of dropped a few short Twitter videos and social media videos. That's going to then come out on July 10th. So quite exciting, all of it. It's been hush hush. I don't think anything leaked out. At least I didn't see anything anywhere. Even though sometimes I tested it. I kind of quietly tested it. You will understand when this all comes out. You're like, now I understand why Julian said certain things or posted certain things or did certain things. It didn't seem to leak, so quite exciting. So I'm very much looking forward. It's going to be a cool party tomorrow. It's going to be purple. So that's the theme for tomorrow, obviously together with Cake. My wife went shopping for me, got me a really nice purple suit. I'm dressed for the occasion. Fabio.
Yeah. So 2 weeks ago, we celebrated our 4th birthday. And I personally read in the chat and on Twitter and so on, a few people gave me the feedback that it was a bit underwhelming. And I fully agree. I even dropped Julian personally a DM and kind of told him that because, you guys wrote me and I felt the same way. It didn't feel like a real birthday. But there's a big reason why it felt underwhelming, because there were a few things we still needed to kind of put the finishing touch on, the cherry on top of the cake, let's say. The cake was still in the oven, but we're kind of done. We're kind of done baking, and we're gonna taking it out tomorrow. And guys, really, believe me, but you want to be there tomorrow. This is the biggest thing that happened, probably, I don't know, maybe ever. There's like two things.
It's a massive step.
It's massive. There's two things that we will bring out tomorrow, and both of those will leave you with an open mouth. Like you're not expecting that, because of course we said there is something big coming. You saw a trailer and this and that, but this is just one thing. The other thing, we haven't talked about that once. Nobody's expecting that. Nobody knows it's happening, and you can be there tomorrow live, and you probably should be. So make sure, make a small note in your calendar. Try to be there live. If you can make it, tune in the same evening, a little bit later today. But it's going to be exciting. That's all I want to say.
Love it. That's cool. Thanks. I don't think anything else with that. Then Fabio, thank you so much. Beautiful episode today. I hope on YouTube you guys doing well. Thanks for tuning in on Twitter. If you're not a user on our platform yet, let us pay you cash flow on your crypto. Head over to cakedefi.com, sign up, and let's get going. And otherwise, tune in tomorrow, Wednesday. Watch the replay if you're not watching it live, and then tune in every Wednesday. Hit the subscribe button, like button, and do all the cool things in order to not miss anything out here. So with this, all the best. Stay healthy, stay safe. See you next time. Thanks so much. Bye-bye.